decisions around personnel and decisions around retracting from markets that you had recently expanded to. I think those are very, very challenging things to do.
Imagine being the new CEO of a company that broke the mold, pioneered a new funding model, created a new category, redefined how e-com founders can scale more effectively. A rare Canadian unicorn valued at $2 billion. It was a rocket ship in hypergrowth, but the week you took it over felt more like Apollo 13, a mission that almost didn't make it home. Headlines of 30% layoffs, challenges that most companies don't survive. That's exactly where our guest found himself. Please welcome to the Iteration Lab, Andrew Curtis.
Thank you. Awesome to be here. Thanks for having me.
Maybe before we dive in, we could just do a quick snapshot of what is Clearco,
Sure.
what makes you different, and why should founders care?
Sure. So Clearco is a working capital provider to...
In plain English.
So we serve direct-to-consumer e-com businesses that need financing. And typically they need financing for working capital. So when they're buying inventory or they want to pay for marketing or logistics and fulfillment, they need to find ways to fund or finance those activities. And Clearco provides capital directly to those e-coms in order to do that. So these e-coms are D2C, so they're selling directly to consumers. They have online operations. That's how they sell their products. Sometimes they may sell through stores as well. But all of our customers have some element of DTC business.
I love that. I mean, I'm a little biased because I'm a D2C e-com founder, pre-revenue. But the second I get a large purchase order, I'm knocking on your door, Andrew.
Please, that's what we're here for.
Okay, let's pick up where we left off. So before you started as CEO, you were consulting for Clearco.
Correct.
So you knew what was happening behind the scenes.
Yep.
I feel like most people would run away from the storm, but you just ran towards it. I'm
Sure.
curious, what made you lean in? And what did those first days, months look like during the transition?
Yep. So just by way of background, I was introduced to Clearco by one of the company's large U.S. venture backers. A partner at one of those VC firms knew my background, and I have a background in restructuring, financial restructurings, and also some structured finance. So it was a good fit with Clearco at that time. What made me lean in was kind of the complexity of the situation. And also I like tough puzzles and I like emergencies. And so all of that was really attractive to me. I mean, when I first came to Toronto, I knew very little about the company. I had met the founders just over a call. I'd spent a little bit of time with the US VC firm. So when I was coming to Toronto, I really didn't know what I was getting into. But once I got here, I made sense of the situation quickly. It was like situations I'd been in before. It felt very familiar to me, just based on what I've done over the course of my career.
Was it difficult being a first-time CEO as you navigated the transition and the rebuild?
Yeah, so I was an advisor from mid-July of 22 through around Halloween of 22, and then I went back home to the States, and then the board contacted me around Christmas of 22 and asked me if I would consider becoming CEO. And, you know, the first time they asked me, I thought they were crazy. I thought it was like a very novel idea. But it was a very exciting opportunity for me. And I will always admit and tell anyone who will listen to me that I am indeed a first-time CEO. And there are lots of things that I've had to learn on the job. And there's still a ton of things that I'm learning every day. But it's an extraordinarily dynamic and exciting job.
I think what's a testament is I was researching you before we did this podcast. And the reviews from when you joined till now has drastically improved, which I think is a testament to your team and your customers, just really appreciating your leadership. So you talk about Clearco 1.0 and 2.0.
Mm-hmm.
Can you walk me through that journey?
Sure.
Yeah.
So 1.0, we call them the go-go days. And so what the founders built in 1.0 was a brand new category, which was revenue-based finance. That's what we call our working capital product. It's revenue-based finance for DTC e-coms. So they did something which I think is really special, which is they created a category out of whole cloth, and they were trying to solve the DTC confounders' need for financing. And so the challenge back then, before we created a category, was if you were starting a DTC ecom and you needed funding, you really had very limited options. You couldn't go to your bank, you couldn't access traditional bank lines of credit. And so you were relying on equity. And so you were constantly diluting your ownership to raise capital to grow your business. So what the founders figured out, what Clearco's founders figured out was, okay, there is this product called revenue-based finance, which exists in the offline world. And so what if we applied it to the online world? And in doing that, it seems so simple in retrospect, but it was revolutionary at the time. They created this extraordinary new category, and they helped so many entrepreneurs, founders, operators build businesses with our capital that would have been tough to do otherwise.
So where did it start turning upside down?
Yeah. So the founders struck this this chord with this great idea.
Fabulously.
And then they grew very rapidly. And the founders were very good at growing the business, and they were also very good at raising capital. And back in those days, we'll call them the go-go days, VCs were rewarding businesses and founders that could show or promise high growth, right? Rocket ship growth, whatever you want to call it. And that was a period in time. That was a specific market. And that's what VCs and other investors wanted at that period of time. So they grew, and they were doing a lot of different things. And so some of it became kind of sprawling, I think, the number of initiatives they were pursuing. And the founders were very creative and highly entrepreneurial. So there were lots of different things they wanted to do. And the company grew bigger and bigger and bigger. And they were raising capital all the time. But at the same time, markets began to turn. And when markets turn, Clearco experienced some challenges. When we give someone capital, we rely on our own financing providers. So if I give you $100 of capital for your new DTC ecom, it's really not $100 of Clearco's capital. It's some of our capital and then some capital that's being provided by a funding counterparty of ours. And so we experienced some challenges with those facilities. We call them asset-based financings. We had some challenges with those facilities in summer of 22. And that was around the time when the economy was beginning to weaken a bit. Rates were increasing. So it was a different macroeconomic environment at that time. And that's when the go-go days began to recede.
So when you think about 1.0 go-go days, 2.0, I guess restructuring, stabilizing, focus, what carried through or carried over from 1.0 to 2.0? What did you improve? What did you iterate on? What was brand new?
Yep.
Did anything survive?
So I think the thing that carried over overwhelmingly is the brand. The founders built something very special that they invested in. And that was something that's very hard to duplicate. So the brand clearly today remains one of our chief assets. The other thing that carried through was just the resilience and the talent of the workforce. Clearco's not as big as it used to be, so we have fewer employees, but that employee core is marked by a lot of people who care very much about the mission of Clearco, which is serving these DTC e-com founders and operators. And they're smart and they're talented and they're hardworking. And they also, the people that are still at Clearco today that were there during the 1.0 days, they have been kind of like through the roller coaster ride, and they're extremely kind of durable and resilient. So I think those are the two most important things. And also a sense of can-do and a sense of ingenuity that, supports everything that Clearco does today.
I love that. I want to touch back on the employees and the upscaling and the downscaling, but in terms of the product suite that you have, because there's been announcements, you have some exciting new products going on.
Sure.
How do they differ from what was previously offered, and what is the benefit?
We recapitalized the company in October of 2023. When we came out of that, we were very, very, very focused, right? So we had a single product in a single geography. And the product that we had then was something called invoice funding. And so the way that product worked was you would come to us, we would underwrite you, we would tell you based on a financial analysis, well, we can give you X dollars of capital. And then you would consume that capital by uploading invoices for inventory, invoices for Google and Meta advertising, whatever the case may be. And then we would pay that invoice directly on your behalf. Today, we have that product, but we also have, as of a month ago, we've gone back to a cash advance product, which is something we had in the 1.0 days, which means I underwrite you. I tell you what your capacity is, and then instead of you uploading an invoice, I just give you the cash, and you deploy it. You're on your own, and you determine the best way to use that capital rather than paying an invoice. So we think of those two products as kind of side by side. Some people want the cash and they want to deploy the capital how they best see fit, or others want us to pay invoices directly on their behalf. The biggest change that we've made over the last 3 months or so is we've created a product, and we've had it in kind of testing since early part of this year. It's called rolling funding capacity. And so rolling, yeah, best we could do. You can think of it as a revolving credit facility. Our product is not technically a credit product, but you can think of it as a traditional revolving bank line. So rolling funding capacity, you come to me, Clearco tells you like, okay, we'll give you $1 million of this capacity. And then what you can do is you can fund it, you can pay back, and then you can fund again. So if it's $1 million and you draw the full $1 million and then you pay back $100,000, well, then you can redraw $100,000. So the most important thing about that is it gives our founders and operators a lot of visibility and predictability into their capital. And so that is what we find that every DTC e-com founder and operator wants, is they want visibility and they want to know, okay, I'm growing very rapidly. I need to know the working capital is available when I need it. So if it's August and they're looking into Black Friday, Cyber Monday, they're making a lot of inventory purchases. They may be ramping Google and Meta campaigns. And so they want to know that, okay, when it comes time in September, October, November, I want to know that I have that rolling funding capacity and that I can rely on it. And then the Clearco is going to be a reliable and steady partner. Because I think that the biggest challenge with funding DTC e-coms is they cannot access traditional bank lines, right? So you can't go to your local bank and say, I run a DTC e-com, give me $1 million. It's going to be tough unless you have a lot of operating history, and the bank also understands your business. So revenue-based finance has to really meet the founder's needs for visibility and predictability. And so our rolling funding capacity product is intentionally built to do that, right? What we hear again and again and again from customers is they want to know, where will you be in 3 months with us? Where will you be in 6 months with us? Will you be a reliable funding partner? Because sometimes I need to move very quickly, right? I see I need to make an inventory buy very quickly. We have a customer who, if you can believe it, he remanufactures transmissions, right? And he actually sells them online and delivers them. But he contacted us recently and he said, well, a large group of transmissions came up and I want to buy them and rebuild them. And so he came to us and we funded him within 48 hours.
That's amazing.
And so he was flying to Detroit and he's like, when I get there, I'm going to look at them and then I'm going to need to fund it quickly. And so then we step in and we help him fund it. And he knows, because we have this product, he knows like I can rely on Clearco to be there when I need them.
See, I love that because I feel for e-com businesses, growth is not like a straight line. It ebbs and flows.
Correct.
It's unpredictable. There's times you need a lot of money or capital. So I love that you meet founders where they need to be.
Yeah, I think it's like, I think people who think that these businesses are linear or they grow in a linear fashion are kidding themselves, or they're just not paying attention because
masks during COVID.
Yeah, you see massive expansion, then you might see a little bit of contraction or modest modest growth,
Right.
and then massive expansion again. And so what you need in a capital partner is someone who can constantly be there for you and be like, what do you need today? And I will provide that to you. And so we don't always get it right, for sure, right? But that is our goal. And that's like when I was talking about the employees and what carried over from 1.0 to 2.0, a lot of our employees are highly motivated by the idea of serving these founders. They play an extraordinarily important role in our economy. And we want to help them grow. And so the best way you can help them grow, and by the way, the best way Clearco can grow itself is figure out the products that satisfy their needs, tailor them, build them, and then provide them to them. And that's what we've been doing post recapitalization when we really had a fairly narrow product suite. So we're expanding and building the product suite all in an effort not only to help Clearco grow, but more importantly, to help support our founders.
I love that. I think going back and touching on employees. So you went from about 600 employees, scaled down to 100. What did you learn from that period, and how do you approach your strategy when it comes to hiring as you rebuild? Do you have any priorities?
Those are all great questions. So the contraction is always challenging.
Right.
And like we discussed earlier, 1.0 grew like a weed. And then we got smaller. So what I've noticed since the recapitalization is like the 100 employees we have today is not the 100 employees we had around the time of the recapitalization. There are always people coming and going, and you're constantly trying to infuse the company with new talent. I think the best outcomes we've had is when we've hired seasoned leaders, people who actually have run functions that we need run well at Clearco, and you hire them, you bring them in, and you just let them do their thing, right? That's one of the biggest learnings from me as CEO is I tend to be high touch, and I like to understand everything that's going on in the business, but you need leaders that you can really lean on. And so what we've been doing post recapitalization is always searching for really talented function leaders and people who are very good at specific disciplines. You bring them in and you introduce them to the company, and then you get out of their way.
Do you feel that now that you're growing, and I love it because I feel you got leaner, more focused, and as you think about your go-to-market, is there a higher focus on client success, staff versus just sales staff, or
so
what is your approach?
I think the biggest and most persistent challenge for us is what we call net new, which are first-time customers or re-engaging customers that maybe had once been Clearco customers but no longer are. We have a very, very good retention rate. So what that tells you is when we find customers, they stay with us. And they stay with us because I presume they love the product, they love the company. It's
because of Mr. Curtis.
Yeah, exactly. Whatever it is, I don't care. But they stay with us. And so our retention rate is quite high. But we're always trying to find new customers to add to that customer success and retention pool. And so like if you really drill down into, we describe it sometimes as the originations puzzle. When we put out capital, we call that an origination. So the originations puzzle is really a net new or first-time customer puzzle. And we're always focused on how do we build more top of funnel? How do we expand our pipeline so that we can find customers that we haven't interacted with before, that we haven't served, and we can bring them all the way down the funnel, get them funded, and then hand them off to customer success, and they remain customers of ours. And if you think about the landscape, the DTC e-com landscape, there are always customers that you have that are getting bigger and bigger and bigger, and maybe they outgrow you at some point, right? You want to see them at some point kind of spread their wings and leave the nest. And at that point, they're accessing a traditional bank facility. Maybe, they start in year one, by year six, they've been through revenue-based finance with Clearco, and then they're going to Wells Fargo. So you have customers who are constantly getting bigger, growing faster, and then maybe they're leaving the nest. And then you got to find a new generation of nascent DTC e-coms that are finding their footing. They're finding product market fit. Then they need working capital, and then they need to grow. So we think of it as this cycle where you constantly have to look for and be successful in identifying the best new brands, right?
I feel it's great that you collect so much data that hopefully that'll help create some.
Hopefully.
Okay. I want to take it a little back because I feel that and thank you so much, Andrew, that the rebuilding, the transition was complex. There was a lot of probably difficult times that we grazed over. So I was wondering if you would peel back the curtain a little bit and give us an example of maybe a difficult decision that you had to make that most people in the public may not be aware of.
One of the biggest challenges I faced during that time was kind of trying to keep everyone engaged and let them know, like, we're on our path, like we are on our way to revitalizing the company, but I need time. And I just kept asking them for time, and they were gracious enough to give it to me.
So I feel that's how you kind of kept that company morale up, or
Yes.
the core team together.
Yeah, I think the biggest lesson for me during that period of time was the value of transparency. Because I think in 1.0 days, it was just a rocket ship. And so it was easy to walk around and just be upbeat and positive. And you're like, I'm part of Clearco and this great Canadian unicorn. And we raise capital like that, and we do it at ever increasing valuations. 2022, 2023, it was a different story. So when I became CEO, what I tried to do day in and day out was just to be incredibly transparent. And I think that like that culture of transparency is what helped us keep everyone together during a very choppy, uncertain time. Just like be very direct and very honest with your employees.
I feel like if you're transparent, then you build trust, and then they feel included and part of the team.
Yes.
So I love that. Again, back to the reviews. They were really positive. Going back to Michelle Romano and Andrew D'Souza.
Yes.
Especially considering Michelle has a little bit of celebrity to her little Dragon Den fame. Bold visionaries, risk shakers, big ambitions. How have they influenced or complemented the way you lead since you've stepped up to VC?
Yeah, so that's a great question, and I think about it all the time. And if I'd love to have them here and they could tell us what they think. But I think like the one thing I take away from them, and I take it away from our customers every day, is they see possibility, right? The world is full of possibility. And so what I always try to take away from them, and what I always admire in our own customers, because they're really not that different, right? They're founders and operators. What I always admire is like they are optimistic and they see the possibility in everything. And that's what you need to do to be an entrepreneur. And like sometimes you're saying yes when everyone else is saying no. Sometimes you see a founder and you're like, God, are they delusional? But that's what makes incredible things possible. And that's what makes what makes them able to build a new category and a company like Clearco that has extraordinary brand awareness today. So to me, that's the number one lesson from Andrew and Michelle is they see possibility in things. And I see that as they go forward and they do different things post Clearco.
I feel like even you stepping in as CEO, coming from a different background, fresh eyes, you would probably also see things a little differently. And maybe that's why it's been, I guess, so innovative and also very efficient.
Yeah. So I think the way I think about my own background is very different from their background. And if I'm being really honest and candid, I don't always see the possibility in everything. I spent the bulk of my career in leveraged credit markets, which means LBO debt. And I spent a lot of time in and around financial restructurings, which means companies that are reorganizing. Sometimes they're failing. And so what I have is like a very kind of cold, steely-eyed view of things. And sometimes I have to remind myself, see the possible in every situation and be optimistic. And don't beat up on yourself for not being able to do everything exactly right, but celebrate things that you are doing well, and kind of inculcate the sense of optimism and possibility in your employees.
I feel like that's a beautiful yin yang because you rein them in, and as they expand.
Yes.
Looking back, is there a piece of advice that you'd give your past self stepping into this? Or any other listener that's going through fork in the road, tough rebuild, or restructuring?
Yeah, so I think I have a couple of ideas there. Number one is just keep going. A value that we celebrate in addition to transparency in all of our communications with employees is be resilient. right? Walk through walls, get used to learning how to walk through walls, because on the other side of that wall is something great. But you have to be tough, and in hard times demand resilience. And so that's something we've talked about at Clearco since day one. The employees exhibited it, the founders, when things were great and then they got choppy, founders exhibited it. So to me, that's like top of the list.
I love that. As you kind of move from 2.0, what does the headline for 3.0 look like?
God knows. No, I'm just kidding. No, 3.0 is about what I'd love to do over time is just expand into new products and markets. So we have been exclusively focused on DTC e-com. It would be great to begin to penetrate the offline world. Revenue-based finance, it is a product that started in the offline world. It's not called revenue-based finance in the offline world, but countless small businesses rely on that product to fund their working capital needs. And I think if you could aim our underwriting engine and our risk and credit and underwriting engine at the offline world, it could be really a powerful thing. So I really am excited about that. And then I just think there are additional products to add. We've added this rolling funding capacity, which functions somewhat like a revolving credit facility. There are term loans. I'd love to add a term loan, which is fairly different from a revenue-based finance product. So there's a incredible world of possibility and expansion opportunities. But what we have really been focused on since day one, post recapitalization, is just do what we are focused on doing today, do it right, and prove it out, and prove that it actually works. And then you can, begin to layer on these other markets.
Scale responsibly.
Correct. Scale responsibly.
I love it.
That's the new mantra I meant.
True. Let's pivot like you did. And I want to turn the spotlight on you.
Okay.
I feel you have a very impressive resume. 20 years, New York finance, Wall Street, working for firms like Merrill Lynch, Lazard, advising major players like Annaly Capital. Also, incredible education pedigree.
Thanks.
Tufts, Chicago Booth, Brown, Ivy League.
Yeah, great.
So, but who is the person behind that resume? Andrew, if you were to describe yourself to me without using any labels or titles, what would you say?
Well, I'm the son of two educators. That's how I always think of myself first. My father was a professor of cell biology, and my mom was a school teacher. She taught English. And I really attribute like everything that I've done and my values and a lot of my skills to growing up in that household. I was the last of four children. I have three older sisters. And it was a household that was filled with a lot of love and a lot of support, but a lot of expectations too. And so I think what I learned growing up is kind of what carries me through day to day.
Would you feel that in your household, because everyone sounds pretty amazing, success was expected?
I don't know if success was expected, but hard work and perseverance was expected. And my parents really expected us to make the most of our God-given talents. And that's something that, like, I have four children, and that's what I always tell them is everyone comes to this world differently. God gives us all different talents and abilities, but your job and my expectation and my parents' expectation of me is you're going to make the most of what you were given. And you're going to work hard. You're going to try to develop whatever talents you have. And you're going to do it for the benefit of yourself, your family, and the people around you.
I think that's amazing. 4 kids. I feel you are crushing it in every aspect of your life.
It's busy. That's all I can tell you.
As a parent, has that changed how you lead at work? And what do you hope that your kids take away from watching you?
Yeah, so it's funny. As a first-time CEO, as time has passed, I see more parallels between the leadership that I am required to exhibit at work and some of the leadership I have to exhibit at home. And I think the number one thing I would say is I've learned the value of not always being a hammer. So I think So I'm trying to lead at home and at work by encouraging people and supporting them and empathizing with them in order to like get them to do the things they need to do and in order to like realize their own potential. So for years, I think, especially when I was raising my kids, I was a bit of a hammer. I'm trying to do less of that now.
Well, you know what? I feel like if you're tough with them in the beginning, you don't need to as they get older.
I hope so.
Right.
That was my plan. So
Restructuring.
I'll let you know how it ends.
What was little Andrew like as we talk about kids? And is there any part of that kid that still lives in you today and parts of him that you had to leave behind?
So I would say the little Andrew was, he was sometimes careless. He was a kid, right? He's less disciplined than I am. He had a lot of fun as a kid. Some things came easily to him. And then as he grew up, like some things came harder to him. I had a very happy childhood. Loved the family I grew up in. I had 3 sisters that took good care of me, parents that took good care of me. I had lots of fun in the neighborhood I grew up in. It was just that was back in the old days when you didn't have helicopter parents and you kind of got to run wild.
Just like stayed out until the sun came down. It was the
best. My parents would ring a cowbell at dinner time.
I love that.
And we had a bunch of woods behind my house, and we'd be in the woods doing God knows what. You'd hear the bell ring, and then you'd come home. So it was like a very, very happy time. I think, everyone leaves their childhood behind. You try to retain like that youthful spirit,
right.
And like that mischievousness, and I think I still have that. But adulthood is more serious, especially if you have 4 kids.
Well, what did you want to be when you grew up?
What did I want to be? So when I was in high school and college, I was really interested in writing and literature.
Oh, that's
so
my next question. Like, good segue.
Yeah, so I was I really enjoyed writing. I studied English and American literature in college. It was something that like I felt I was good at, that came naturally to me. And when I first left university, I worked at a children's book publisher as an intern the summer after I graduated, which is kind of crazy in retrospect. And then I worked for a magazine, Inc. magazine, INC period, which is based in Boston, and it's kind of funny when I think back to it now because it's a magazine focused on small, rapidly growing businesses, and here I am, decades later, working for a company that serves rapidly growing small businesses. So that was where my interest was at the time, but then that kind of changed, and then I ended up going to graduate school, and then I went to New York and worked in finance for a long time.
I feel like beyond the foreshadowing of Inc. magazine, night and day, publishing,
yes,
to finance, and then to Clearco. What did that winding path look like, and how did you graze over?
It's a great question. I think there are a bunch of things that I think about when I think about that transition or that shift in interest. One is simply I had a view of what the world of finance would be like, and I thought it would be exacting and demanding, and I didn't find publishing to be that often. I also felt like that world would be very meritocratic, right? And so you would be rewarded for a lot of hard work and talent. And I wasn't sure I always saw that in, the limited publishing experiences I had. And I also think like I was probably victim to like a very romantic idea of working in
movies
finance.
of love.
Yeah, exactly. I probably had like completely uninformed romantic views of what it would be like, and then you get there and you're working as an investment banking associate, and you're working 100 hours a week, and it feels a lot less romantic at that point. But it was a lot of hard work, and it's an extraordinary training ground, I would say. And that's the one thing I really appreciate about those days is that it was a very exacting environment. People had very high expectations of you. You learned a lot in a very short period of time. And what you learn then serves you for years and serves you over the course of your career.
Well, I feel like you were there in like the good old days. Like when people think of Wall Street, you living the dream. And so now that you've been in New York finance, pivoted to Toronto Fintech, what is one thing that you loved about the other that you would pick and smush together?
If I could.
Yeah, if you could.
So the one thing I would say about working in finance in New York is that people are they're very narrowly focused, but in a good way, right? And so sometimes people criticize New York City or Wall Street workers as being overly focused on making money, but it does create a clarity of purpose, and that world to me is very efficient, very, very efficient. And the people that work in that world, at least in the jobs I had or the sectors I was in, they're very hardworking and they're generally very bright. And you don't really have to spend a lot of time encouraging them to do one thing or the other. They just show up
Goal oriented.
And they are very goal oriented in this like clarity of purpose or clarity of vision. But at the same time, it's a very narrow world. If you're a bond trader, you come in every morning at 7:30, you trade bonds all day, you go home. And so some people love that, and they'll trade bonds or institutional term loans or equities from the time they're 22 to the time they're 55, and that's fine. Like they love it. But it's like I never found, or I found that sometimes like stultifying or very narrow to me. And so what I see in Clearco is just like a much broader field of vision, and the people are like they're different, right? There's more heterogeneity in the employee core. Like in New York City, you work with a guy who went to Wharton, and he's a smart guy, and he's very motivated to make money. But there's a lot of homogeneity on the street.
I think that's a really good point. I didn't even really think of it that way. Okay. Now that we talked about Clearco and learned a little bit more about Andrew, we have a fork in the road, or a segment called Fork in the Road. Oh, okay. So basically it's rapid fire, this or that.
Okay.
Questions. Don't overthink it. Just go with your gut.
It's going to be hard.
Yeah.
It'll be hard.
Depends on the day, right?
Right.
Early bird or night owl?
Night owl.
Me too. Coffee or tea?
Coffee.
Mountains or ocean?
Ocean. These are easy, actually.
Is it? Book or podcast?
Book.
Oh, fair enough.
Sorry.
Oh, fair enough.
My bad.
Publishing. Ink or children's magazine? I'm kidding. Text or phone call?
That's a good one. Text.
Fancy restaurant or food truck?
Food truck.
Now let's go back. Wanted to touch on hopes, kind of looking ahead, your dreams for the future. So when you think of your role today, whether it's your job or the industry, what really excites you right now?
Well, what really excites me is continuing the rebuild at Clearco. I think about, that summer 22 period and 23 period as extraordinarily challenging and arduous. And the recapitalization that we were successful in completing was like very tough to do. Very high degree of execution, complexity, and risk. And like I always say, like 9 out of 10 times or 19 out of 20 times, that company shouldn't exist, shouldn't have made it.
You're a cat, the cat with 9 lives.
So the challenge now is, if that's true, then it has to succeed. And the idea of having gone through that and all the employees pulling the oar in the same direction to get through that very tough time, now it puts pressure. I feel like it puts pressure on me and them as well to actually make something of it, right? Because part of the recapitalization depended on some of our investors, a relatively small group of our investors, giving us additional capital because they believed that Clearco should survive, that Clearco is something special, that the founders had built this incredible brand, and they gave us capital. And I feel a great sense of obligation to them to try to figure this out and to make Clearco a juggernaut and to make it cash flow positive and all the good things that every company should be. And so that's what I get most excited about, and that's what I'm most focused on. And I always joke around, and I say to some of my colleagues, and I say, if we can do the recapitalization, which was very tough to get done, and we can't figure out first-time customers, I'm like, it'll kill me. So we will figure it out. We are figuring it out, and we just want to keep growing. And the other thing that's inseparable from all of that is we have customers to serve. And these customers are scrappy, hardworking people who have dreams, who have built products and services that people want, and they're trying to get them into the hands of their own customers. And we really want to be there to support them. Of course, Clearco is its own business, has to be profitable. But we have this North Star of supporting founders and operators who are doing things that are incredibly tough. So when I think about the resilience that we exhibited through those dark days in 22 and 23, I think of it as very akin to the resilience and the hard work that all of our founders exhibit. And I talk to customers every single day. And it's like one of the favorite parts of my job. And what I see in them is what I saw in Clearco's employees, today, as well as a couple of years ago. One foot in front of the other, driving forward, trying to solve complex problems in order to achieve success. And that's what really, really excites me.
I feel like that's amazing, especially because you're very high touch. People may not know, but you live in Connecticut.
That's correct.
You fly to Toronto. I've heard stories of you living out of a suitcase for a month as time was going on.
Yeah, it was particularly bad in 22.
Back up.
I just didn't go. So I give my wife a lot of credit back then. Now it's more sane, but we are a company that grew dramatically during COVID. So we remain kind of a remote first company. So we try to find opportunities to spend time together. We sometimes meet in New York in groups. I come to Toronto. We have a lot of Canadian employees. A lot of our reps, our account executives live in the GTA, and then a lot of our engineers and software developers are, around Toronto, the Waterloo area for obvious reasons. And so I love coming up, and it's a great city, of course.
I love that. And this podcast, I feel like this will build your MQL base.
Yeah, it's awesome. It's a great opportunity. Great opportunity.
Awesome. So beyond Clearco, as you think about fintech or even funding, how do you see that evolving over the next few years?
So, it's a great question. I'll say the most obvious thing, which is there are going to be greater and greater applications for artificial intelligence. Not only in the obvious fields, which is underwriting and risk management, but we see really novel applications of AI in GTM. And so in our sales motion, we're spending a lot of time trying to understand how best to use automation tools like Clay to help us find new customers. And they're extraordinarily powerful tools. They take time to master. Takes time to learn how to use them and to exploit them or leverage them. But when you get it right, they're quite stunning to me. But it takes time. That's the one thing I would say. And what we see when in these tools that we use in Clearco specifically, possibly the greatest value of the tools is they tell us a lot about when our customers need capital. And so we call them buying signals. Like, what buying signals can we discern in all these DTC e-coms that we know? What buying signals can we discern so that we are going to them proactively to give them capital when they need it most? I see that kind of application in countless ways throughout fintech. I think there's conversely, I think there's this idea that those tools can revolutionize underwriting and the way you assess credit risk. And I agree that there are powerful ways that they can do that, but it may be overstated sometimes, right? Like, we've been using machine learning models,
right,
since the company was founded. They're important, right? But there's also some human diligence that goes on when we're trying to assess credit quality. And I think, of course, the promised land is you have no humans involved in things like financial statement analysis or underwriting, but I think that that's probably unrealistic, at least in the near term.
Well, I'm hoping that by the time I'm ready, and will figure itself out in your company.
Totally.
Okay, we do something called the next iteration.
Okay.
This is where the last guest asks the next guest a question.
Oh, no.
I know. So before you give me a question, this was a question.
When you started your career, what was the one piece of advice you wish someone had given you that you think is still true today?
The one piece of advice. Don't rush. That's what I would say. Don't drive incessantly fast and hard all the time. Take a deep breath every once in a while.
Coming from a man that did a crazy restructure.
That's the one piece of advice, because there's a lot of value in pausing, taking a deep breath, assessing, and just driving hard day in and day out is not always a winning approach.
So, Andrew, what is your question for the next guest?
Okay. My question is, what is the one thing above all else that brings you joy?
I couldn't agree more. One last question.
Yes.
Iterate or disrupt?
For me, iterate.
On brand.
That's consistent. Yeah, exactly. I don't want to throw you.
Thanks so much for joining us today, Andrew. Really appreciate your time.
To our audience, thank you so much for joining us in the Iteration Lab. If you enjoyed today's conversation, don't forget to like, follow, subscribe, or share content so we can bring you more conversations just like this one. Until next time, keep moving the dial.